Now, I'm currently a 32-year-old dividend investor who's betting their retirement on the Schwab US Dividend Equity ETF or SCHD. Now, I say this because currently I have 2,352 shares of SCHD, which is not necessarily my entire net worth or the biggest investment I hold on to, but is a massive, massive part of it. Now, I also say this because SCHD is going to be a massive, impactful piece of the puzzle when it comes time for my retirement. This is based off of several different things. So if you want to go through and see exactly why I'm betting on SCHD when it comes to my retirement and all the reasoning behind that, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, just for some more context, I've been buying shares of SCHD for several years now, buying a few shares here and there, sometimes more on red days, sometimes less, but so far across all the portfolios combined, I have around 2,352 shares of SCHD, which I bought for the most part a few dollars less than where it's trading as of right now. Now, according to my SCHD dividend calculator, I'm currently earning around 2,300 or so odd dollars per year from SCHD, but with the future dividend growth, if SCHD grows their dividend by 11% per se, I'm going to be earning more and more dividend income year after year, and this is especially going to compound significantly when it comes time for retirement for me, whether that's in 5 years, 10 years, 15, 20 years. Now, this is one of the main reasons that I am buying so much SCHD and betting my retirement, or at least portion of it, on this ETF. Is because over time I expect things to probably get more expensive, whether it's property taxes or rent or whatever the case might be. So buying into something like SCHD that at least historically has offered around 11% dividend growth, that's going to allow my passive income to grow and hopefully not only keep up with inflation, but hopefully outpace it. Now, dividend growth is one of the main reasons, like I said, that I am focusing so heavily on buying SCHD and using it as a retirement position. I mean, after all, I really don't plan on selling a single share of SCHD, maybe even ever in my portfolio, when the rest of my positions are sort of somewhat up for grabs. And this is again because this position is a foundational position for my retirement. This is going to be a massive pillar of my overall passive income in the future. Now, one of the other main reasons I believe in SCHD and I'm betting so heavily on it, at least in the context of my portfolio, is because the objective of the ETF, the fund's goal, is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. And I've referred to this multiple times in the past, but this user on Reddit actually broke down why SCHD's methodology is very, very high quality, or at least how it's done so well historically. Now, here's some portions from the Dow Jones US Dividend 100 Index methodology, which of course is the index that SCHD basically tracks. It says the index universe is defined as the constituents of the Dow Jones US Broad Market Index excluding REITs. Stocks must pass the following screens. Now, this is the main reason I do believe in SCHD long term. Not necessarily what's going to happen today or tomorrow, but within the constraints of the underlying methodology, I do think that this is going to have a nice positive output like it has historically. Now, some of the screens are a minimum of 10 years of consecutive dividend payments, which again, in the context of what I'm looking for, is going to be very important if I'm looking to build out a portfolio, which I am, to not only keep up with inflation, but also surpass it. Now, minimum float adjusted market capitalization of US 500 million and minimum 3-month ADVT of US 2 million. Now, this writer went on to say step 1 is hard to pass, with about 92.6% of all stocks already failing. Number 2 is very easy because there's lots of big companies and exists to filter out around 20% of US companies. Step number 3 requires a 3-month-long average daily volume of greater than 2 million per day. Step number 4 is very easy and exists to filter out 20% of US companies. Combined, the universe is slightly larger than 300 companies. They then said these 3 filters that produce an interesting universe full of great companies, but how does the universe refine the last 300 great companies to 100 stellar companies? They then go through and break down exactly how the next 100 stocks are basically chosen. And again, I've made videos on the methodology of SCHD before, so check some of those out. But to put things simply, when choosing an ETF that you want to hold on to long term, and in my case, all the way until and through retirement, you're going to want to have an ETF that you believe in, especially the maybe complicated objective that SCHD offers. Now, the cool thing is because I currently already have 2,352 shares of SCHD, which as a lot of you guys know, I still am buying more shares of SCHD. I'm not stopping as of yet. I want to grab a few shares every single trading day, more or less, and again, more on red days, probably less on green days. But because I have 2,352 shares of SCHD, with SCHD being around $27 per share, again, this is all just based off of estimations, guys, take it with a grain of salt, a 10% annual dividend amount increase, which again can go up or down, 5-year expected annual share price appreciation, $5,000 on top of the already 2,352 shares that I have. So this is saying that I'm going to buy an extra 5K worth of SCHD every year. And to be honest with you guys, I'll probably buy more than that, maybe double or triple that. I mean, last year, I think I bought $40,000 worth of it. Now, this is for 30 years invested. I'm currently 32, so this would basically share with us what I'm going to be looking like when I'm 62 years old. Now, drip is going to be turned on for this example. I currently don't drip my SCHD dividends into more shares of SCHD. I take all my dividend income that comes in, move it to my cash balance, and then just buy dividend paying stocks and ETFs ongoingly. Now, if we were to calculate this out over the next 30 or so years, again, based off of the 2,300 and so odd shares that I currently have, I'm currently earning around $2,200 more or less per year in dividends. By next year, with those dividend increases and with purchasing around $5,000 more for this video's example, we're already up to like almost $2,800 per year. Now, again, the thing about SCHD is that you're not necessarily that concerned about what it's going to be offering you in dividends. Today or tomorrow, you're buying into names like this one to grow over time and to offer massive dividend growth, which is exactly what's going to happen because 10 years down the road, we're already at almost 5,000 shares of this ETF and around $10,000, $11,000 per year in dividends. Now, 20 years down the road, I'd be 52 years old with almost 10,000 shares of SCHD and around $56,000 per year in dividends. Now, this would hopefully put me at a pretty good spot because, again, SCHD is not my only position I hold on to, of course, although it is a pretty big one. Now, 30 years down the road, again, just based off of the numbers we inputted, these numbers can, of course, change like crazy. But based off the numbers we talked about, 24,000 shares of SCHD more or less, with around $300,000 per year in dividends, and with a position value of around $3 million. Now, again, we don't know what's going to happen in the future. Maybe SCHD doesn't raise their dividend by 10% over the years. Maybe they change it to 3%. And maybe the price only goes up 2% per year. A lot can change in the future, and because of that, the ending balance and the amount of dividends are also going to change extensively. So that's exactly why I still consider this sort of a bet, because we don't know exactly what's going to happen in the future. You can look at past performance, but it does not indicate future performance. But I am betting that SCHD, at least overall, over the next 10 years, 20 years, 30 years, is going to do quite well. And again, that's because SCHD does have a high quality methodology that makes it very hard for dividend paying stocks to even enter the underlying. Now, because of SCHD's methodology, some investors have been critical, saying that some of the top names in the ETF as of right now, for example, are not the best dividend payers, but they are within SCHD because, of course, of those screenings, and they made it through somehow. But regardless of all that, if you look at SCHD's performance historically over the last 13 or so years now, the ETF has grown around 227% as far as price return goes, and has offered bigger and bigger dividends year after year to the tune of around 11% over the 10-year dividend growth rate. So again, as of right now, at least for me as an investor at 32 years old, I am betting on the fact that SCHD is going to at least somewhat keep doing what it's been doing in the past, but again, only time will tell. So now that I shared with you guys the fact that I currently have 2,352 shares of SCHD and plan on keep buying more and more shares as of right now at least, and am planning on utilizing and betting on this position when it comes time for retirement later on, I lastly, most importantly, want to hear from you guys down below. When it comes to your retirement position, whether it's a single stock or an ETF, what position are you building out as of right now if you're relatively younger for when it comes time for retirement? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.